Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll get better with saving, spending, and today we're talking all about investing with Robo-Advisors. So in this video, I'll be covering a quick overview of what a Robo-Advisor is, the key features that StashAway offers, a walkthrough through some of their systems. I'll be walking through also what happened in March because that's what's going on in people's minds. How did they survive that crash? And finally, wrapping it all up with what I liked and what I didn't. So this isn't a sponsored post. It's an unbiased review from me as a customer over the past 6 months. So let's start with a quick introduction to Robo-Advisors and StashAway's key offers. So in general, I believe the Robo-Advisor space offers you 4 key things. So the first key benefit is that it usually becomes a very easy way for you to set up a portfolio that suits you. The second key benefit is automation. They talk a lot about how it makes it very easy for you to consistently become an investor. Thirdly, the entire process is managed for you, so you don't really need to lift a finger besides doing manual top-ups if you wanted to, or like I said, you could even automate it. And the final point is that they do it all for one low flat fee. So let's dive into some of the key features that StashAway offers specifically. The first key feature is how you fund the account. There are quite a few players in the market in Singapore, and usually you're able to fund it with any form of your savings. But with StashAway, they're one of the few players that allows you to do it with your SRS funds. The second key feature is that to find a portfolio that fits you, it's a combination of 2 key things. The first key thing to note is how they determine what fit is, and they use this thing called StashAway Risk Index. So the SRI is expressed as a percentage, and it runs from as low as 6.5% up to 36%. So because you have a range of different percentages, how it works is that if you've selected say 36%, what it really means is that there's a 1% chance of you losing 36% of your portfolio's value in a given point. If you chose 6.5%, which is the lowest risk one, there's a 1% chance of you losing 6.5% of that portfolio's value at a given point in time. So to use a metaphor of a floor and a ceiling, what you're really doing is you're picking the floor. You're trying to limit the total amount you're willing to risk of your portfolio in pursuit of those gains. The second feature about finding a portfolio that fits you, it's the different ways you can do that. Firstly is using this term called general investing, which they kind of just use a slider bar which allows you to pick which percentage that you want. Another way of doing it is going through a goals-based filter. So what they have there is a series of different goals, each of them having different calculators inside. What it does is it helps you figure out how much you need to invest to reach those goals. The final option for you is income, which is actually only one choice, but it's geared towards those of you who are looking for income being generated from that portfolio. So let's dive into user experience as a customer. So I created my portfolio back in December of 2019, which is the 36% one, and I funded it using my SRS funds.
Hey guys, so welcome to the landing page of my StashAway account after you've logged in. So as you can kind of see, the layout's pretty nice, very simple. Bright colors, and on top of that, I think the information is laid out fairly easily for you to see. And as you can see on the right, you will have a kind of a summary of your portfolio value. And this is the investments that you're in. Like in my case, it's general investing. And if you scroll down a little bit more, you can begin to see the different kind of products that they have. So very briefly, I covered earlier, I've talked a little bit about the cash option that they have, which is if you want to just put money in as a savings account, you can kind of do that at 1.9%. And if you wanted to, you can keep planning by buying different products. Like I mentioned earlier, there are 4 key ways of doing it. You can go through general investing, which is what I did. There's the goal-based investing, which has all those calculators. There's the income portfolio, like I mentioned, which is one option only. And finally, you can top up through your SRS funds. Another useful tab to see on the landing page is this tab here on the right, which is basically their latest posts. They talk a lot about market commentary, what's happening in the markets. Occasionally, they'll provide blog posts. For example, this one in May, where they were doing a re-optimization of the portfolios. But with that said, that's about all that's pretty interesting for the landing page. Let's move on to the different tabs. So this is probably the most interesting one for most of us. If you scroll down, you'll see that the information is laid out quite nicely for you. In this case, it's SGD and USD. And if you wanted to see it in USD, you can calculate it there as well. What's also neat is they kind of tell you the total returns after fees. The other interesting thing to note is of course this huge chart over here, which kind of shows you that first of all, there's different timelines for you to kind of look at your charts, what happened in the past 1 month, 3 months, so on. But now let's dive into the more interesting bit, which is looking into the actual portfolio itself. So let's click on the general investing tab. As you can see, there's quite a bit of information over here. So already on the top, there are different tabs for you to explore. First of all, there's the overview of what this whole portfolio is about. There's the assets tab, which tells you naturally what the assets are underneath it, the different projections, and the about section. So let's go through it one by one. So very quickly, the information over here at a glance is pretty much similar to what you saw in the previous slide. So there's really nothing too new over here. What you can kind of see as a slight difference is this one here on the right, the time-weighted return and a money-weighted return. And there's a bit of an explanation over there that tells you what the difference is. So now that we're within the assets tab, here's where it gets a bit more interesting, because you can see the total composition of your portfolio. The information here is kind of split into what the different sectors are that you're in. And as you can see, it's a lot more on equities. Like I mentioned earlier, this is the 36% risk portfolio. So they kind of position it to you as 100% in equities. But since the May change, there has been quite a fair bit amount of commodities being placed inside. This is kind of a geographic kind of allocation. Not particularly important for me, but still nice to know. If you scroll down, this is where you can kind of see the different asset class. And in this one, they show you quite a fair amount of information, showing you the different asset classes that you're in, the weightage of your portfolio. So for example, in this case, in small caps, I've got about 16% of the portfolio in there, and they tell you the return in that time period as well. But you can dive a little bit deeper if you want to understand what is the specific fund that they invest in. So for example, under small cap, as you can see, there's a clickable button here. If you click that, so in this case, they already have the stock ticker out for you, IJR. But if you wanted to know more and you clicked on this, it would bring you to ETF.com, which gives you a lot more information as to what that fund is. So that's it for what I think is interesting under assets. So very quickly, I'm going to go through the last few tabs. So the reason why I don't think there's a lot of value in spending time here is this are really hypothetical projections of where your portfolio could be in the future. And finally, there's the about portfolio. And this is really just a summary of what your portfolio is. So the final bit is like, for example, if you look at more actions, you can kind of adjust your portfolio, you can make a deposit, you can view transactions.
Now that we've covered the web experience, let me very quickly cover the mobile experience, which is mostly the same, but nevertheless it's a well-built app that has a couple of features that are slightly different.
So earlier I showed you the desktop experience. This is the mobile landing page and what it looks like. So the information is pretty much the same level of information, not too much that's different. But as you can see, things are fairly laid out quite nicely. If you scroll down, again, the layout is the same. You've got the ability to buy different products, and the market commentary and the different posts are on the bottom. But if you go down to general investing, what I wanted to kind of show you is, if you click under assets, the slight difference over here is the way they put out the information. So as you can see, there's this neat little circle tab over here that shows you, yep, currently you've got 39% in US equities. If you click the button again, very nicely visualized, it looks really neat. So 33% in international equities and 20% in commodities. So earlier in the mobile experience, you kind of have to dig a little deeper to find the stock symbols. But over here, it's pretty easily found. If you look at a glance already, if you click over here, the information is there at the start anyway, on the very top. So you can see AXJ. So all this information is laid out for you.
So now that we've covered the key offer as well as the user experience, let's talk about the big question in a lot of people's heads. What happened during March? My 36% portfolio had 100% exposure to stocks, and it experienced a 31.28% drop from the peak to the low point. In comparison, during that exact same period, the S&P 500 experienced a drop of 34%. During that period, they were actively communicating to customers and really reassuring us that everything was okay. On top of that, they were hosting webinars to help people understand what's going on in markets and hopefully calm our nerves. What's interesting is that by May, they announced that there's a reallocation or re-optimization of the portfolio. So since then, there's been a steep recovery in the US markets. So let me walk you through what has happened with my portfolio. So overall, my portfolio has recovered about 33% since March the 23rd to June the 8th. If you looked at SPY, which is a fund for S&P 500, it recovered by about 45%. If you look at VTI, which is a total market fund, it recovered by 47%. So I also asked myself the question, hey, what would have happened if they didn't switch out the assets in my portfolio? Long story short, if they didn't touch those original allocations, I would have been up by roughly 3% more than I am right now. So what's the point of me bringing that up? It is not to criticize their portfolio, that's way beyond me as a regular investor, but I think it's important for us to acknowledge two key things. The first is that when you're signing up for these robo-advisors, you have to trust them completely and how their systems work. The second key point is that even if you disagree with it, there's no real way to make modifications. It's a happy meal. So with StashAway, there's actually a setting which allows you to turn off the auto reallocation. You could turn it on in the future if you change your mind, but that's an option for you to do it. However, you still cannot revert your portfolio back to its original form even if you disagree. Another neat feature that you can turn on is actually the YouTube bell button, where it'll tell you every time I release a new video. So let me start with a summary of what I'm happy with. So after using 3 different robo-advisors, I have to say their overall experience is standout. They've got great user experience in terms of their functionalities, they've got great customer support as well. The second thing that I really like is that they're very active in engaging the community, and there's always some kind of webinar going on. So they're really proactive in educating you. And overall, I have to say that they live up to the general promise of being a good robo-advisor. They make it very easy for you to start investing, they hold your hand and basically communicate with you very clearly what's happening. You can start very easily, even with a small amount of money, you can automate it, and on top of that, you can fund it with your SRS funds. That's great. So let's talk about some of the things that I'm less enthusiastic about. The first is, when I signed on, I was under the impression that it was relatively passive in terms of how they invested. Now, I'm not sure where I got that impression, but I also understood that they have their own algorithms and they call it ERA, E-R-A-A. And that's how they make the decisions to reallocate their portfolios. So while I'm aware of that, what I'm slightly uncomfortable with is that in the past 3 years alone, there have been 3 different reallocations. So as a passive investor, the question is 3 times in 3 years too many reallocations? Connected to that, I'm not entirely sure that I agree with some of the allocations. For example, right now, my portfolio has about 19% in gold itself. The next 2 things aren't unique to StashAway, but I thought they're important points for us to know if you're interested in becoming a customer. The first are fees. So let's talk about how StashAway does it. It starts from 0.8% at the highest point, and it goes all the way down to 0.2% if you've got like $1 million invested. What they do tell you in the website is that you are also being charged an expense ratio by the underlying funds. This is normal and it's practiced across all the different type of robo-advisors, and the reason why is that robo-advisors themselves buy underlying funds, and those funds have their own managers and expenses. So the expense ratio is something that you need to pay for. It does not come out of your StashAway account, but it comes out of the value of the fund itself. So it's automatically deducted. For StashAway specifically, at different points in the website, sometimes they call it out as a 0.2% on average, or sometimes it's a 0.4% on average. An important thing to note is that this is an average. So if you were to go through your portfolio and pull up the different assets that they've bought, you would find funds that have certain expense ratios which are higher than you might have thought. Now, I could pull up every single fund and pull up every single expense ratio, but I'm choosing to trust that in average, they will fall within the 0.2 or 0.4% total expense ratio. The second thing to note as a potential customer of robo-advisors and StashAway is that the way they allocate these portfolios to you and how they find the right fit, I'm not entirely sure how robust that is. The reason why is that you will never truly know how you feel about the situation until you actually see your portfolio get cut in half or get cut by 30%. Now, as a potential investor, because you never really know until you see that happen to your portfolio in real life, there is no perfect way of identifying what your real risk tolerance is. We as investors just have to see how it goes. So if you're a risk-averse person and you're somebody who's relatively new in investing, my advice is to choose one of those portfolios that are slightly on the safer side. So with all the technicality out of the way, what I have to say is that as a customer and as an experience, it has been a great one so far, and I have to really commend them for that. So if you're shopping around for a robo-advisor, StashAway is a good option to look into, especially if you like great customer service and you like a community that's trying their best to educate you and engage you in investing. So thanks for watching, and I hope you found this useful. And if you did, I would really appreciate you hitting that like, subscribe, as well as that bell button, because all those little things help my channel grow. If you've got any questions or comments about StashAway, share it with me down below and hey, maybe I can try and answer them. So until next Sunday, take care and keep playing your own game.